After a break from being out of the classroom for a while, it's great to be back in the classroom working with young adults. Here I've asked them to represent the accounting equation. So there we got an O, and we have an L, and somewhere I think I saw an A. So a little bit of revision before I carry on. But what is the accounting equation? Assets equals owner's equity plus liabilities. In this series, I'm going to be introducing property, plant and equipment, PPE, and what we're going to cover in this series, we're going to cover the acquisition of property, plant and equipment, depreciation, capturing depreciation, calculating the profit or loss on the disposal of PPE or non-current asset. We're going to capture, not just calculate, but capture the profit or loss of asset disposal. We're going to record expenditure on PPE, like the delivery of a non-current asset. We're going to record PPE in the statement of financial position to truly reflect, after depreciation, the value of our non-current assets. And we will also conclude this section with the property, plant and equipment note. Right, so we're going to look at depreciation of non-current assets and the property and plant, or property, plant and equipment note. But before we carry on, just a little bit of revision, just to show you where we are in the monthly or yearly accounting cycle. We transact in order to make a profit. So capital contribution, you would have covered this all before we get to year end. This is what happens on a daily and a monthly basis in bookkeeping or accounting. All these transactions would have been recorded on source documents, and the source documents would have been used to record the information in journals. You might call some of these journals a different name. For example, a debtor's journal is a sales journal. You might have called this the cash receipts journal and not the cash book receipts journal. Some textbooks just use different names for the journals. A creditor's journal will be known as a purchaser's journal. You get a purchaser allowance journal. But you get the idea. We are busy just with some revision. I'm showing you what happens on a monthly basis. You would have done all this before if you're watching this video. The information, so it's summarized in the journals and posted to the ledgers. You got the general ledger, accounts receivable and accounts payable, the debtors ledger and the creditors ledger. And then you also did reconciliations, a bank reconciliation. And after 12 months, you have drawn up a pre-adjusted trial balance. This is where we're going. So after 12 months, we need to draw up a statement of profit loss and a statement of financial position to truly reflect the financial result and the financial position of the business. So 12 months have happened. You've got a pre-adjusted trial balance. And now we're going to get on to adjustments. And the first one we're going to do has got to do with property, plant and equipment. So a little bit of revision. You've done the books for 12 months and we're at this stage. where we need to check if we've made a profit and what our financial position is. Just before we get on, still revision, we're going to be working with timelines quite a bit over the next videos, next maybe 10 videos when we do adjustments. Financial year, any 12 consecutive months. I've just taken here from the 1st of January to the 31st of December. We've done trial balances, 12 of them. We're at year end and we need to finalize our books for the year. And then what we have, as I mentioned earlier, is we have a pre-adjusted trial balance. So the point of adjustments, and we'll get on to adjustments in a lot more detail soon, is to truly reflect the actual position of the business. For example, here, it's the end of the year, and there's equipment, vehicles, and you all know. Well, my question to you, is that figure 152,522 a true reflection of the value of the vehicles? And you will most probably tell me no, because there's been some wear and tear on the vehicles. Vehicles is part of property, plant and equipment, our non-current assets. We need to do an adjustment. Nelson Mandela, Mr. Mandela, is just having a look at the numbers, and he's into fair representation of all the numbers. And you will see, if you don't already know, these numbers here in the pre-adjusted trial balance don't truly reflect the financial position of the business. Okay, just to recap there, financial year, and we need a definition here of non-current assets. First of all, current means the 12 months that we are busy analyzing or recording transactions, our financial year. So non-current are all those assets that we've bought to keep for some time. We got no immediate intention of selling these assets, and these assets will be used to generate a profit. For example, land and buildings underneath the car is equipment, furniture, vehicles. Those are all examples of non-current assets. Current assets are either cash or things that are converted into cash within 12 months. Examples of current assets: a positive bank balance, petty cash, accounts receivable, which is debtors, stock, inventory, trading inventory. And just so you remember, cash is a current asset. They say your most valuable asset is your reputation. Do you agree? Right, just to reiterate, non-current asset, very important. Non-current assets, it's your PPE, your property, plant and equipment. That's what your non-current assets were called, PPE. And there's a definition again of current assets. Right, I just put that in there. Non-current liability, it's a long-term obligation to pay back over 12 months. Current liability, accounts payable, for example, you owe a supplier. And there's your cash and the vehicle, which is a non-current asset. Just some property, plant and equipment jargon or terminology. We're going to be working with this. What is the historical cost price? The original price of a purchased item, excluding VAT, if VAT was applicable. But it's the original cost price of a non-current asset. Well, it could have been a current asset as well. But historical cost price, the original cost price. Accumulated depreciation, the total depreciation of a non-current asset added up over its useful life. So if I'm going to use a delivery vehicle, its useful life is 4 years. We're going to deal with depreciation. Every year that vehicle depreciates, it decreases in value every year. The accumulated depreciation will be all the depreciation added up over 4 years in my example. Very important. What is the book value or carrying value? It's the historical cost price less the accumulated depreciation of that asset. That gives you the book value. There it is. The value of an asset that remains after accumulated depreciation has been subtracted from its historical cost. What is the depreciable amount of a non-current asset? The full potential value of accumulated depreciation of a specific item over its useful life. So similar to accumulated depreciation. And what is depreciation? The decrease in the value of a non-current asset due to wear and tear, useful life. How many years will the non-current asset serve the business to generate profit, economic benefits? And what is residual value? It's the estimated value of an asset after its useful life. What will the car be worth after 4 years if that's its useful life, if that was agreed upon? The useful life of a delivery vehicle is 4 years. What is the estimated value of the vehicle after the 4 years? That's the residual value. That's just a summary. You can pause the video if you want and have a look at this PPE jargon terminology. Okay, I'm just going through the definition of an asset again. We are going to be looking at non-current assets, which is known as PPE, property, plant and equipment, land and buildings, equipment, furniture and vehicles. Just in addition to the definition of an asset, a resource that is controlled by the business as a result of a past event. That just means a purchase of an asset, which will result in economic benefit, a profit. There is a cost involved when acquiring an asset, and there's a good chance that the asset will generate revenue for the business. So a little bit more about an asset, the definition of an asset. But like I said, we're going to be working in this series with non-current assets. Just some types of business. You get a manufacturing concern. you get service concerns and trading concerns. Manufacturing concern, you produce products. Service, for example, a lawnmower service, they don't sell you a product, they don't produce a product, but they cut your lawn. A hairdresser, a lawyer, an accountant, those are service concerns. A trading concern, you buy and sell stock. Now, what PPE would be typical to a manufacturing concern? I would say machinery. Although a manufacturing concern can have equipment, furniture, and vehicles, but typical to a manufacturing concern is machinery. What PPE would a service concern have? Definitely a place to operate from, land and buildings. Could also have equipment, furniture, a vehicle, if it's a lawnmower service. A trading concern, if we're looking at PPE, not the current assets, but a trading concern could also have a delivery vehicle, furniture, equipment. Right, so that's the type of PPE that these three business concerns would have. Here's an example of my office. I'm a sole proprietor and I deliver a service, and I obviously need a place to operate from. I can't operate all the time from a coffee shop. It gets too expensive. So I have an office, and that would be my land and buildings, my non-current asset. Okay, this is an example here. You need to identify a delivery vehicle in the name of the business. What is the asset? Vehicles. And it is an example of a non-current asset, which is PPE. Rub that out quickly. A car dealership sells vehicles. Now, a car dealership buys and sells vehicles. So in this case here, vehicles is actually inventory. It's stock. It buys and sells vehicles. It is not PPE. It's a current asset. And a business owns land and property. Land and property is PPE. Land and property is bought for a long period of time. It fits the definition of a non-current asset. There, the non-current assets listed, as opposed to current assets. So in the first example, vehicles was PPE. In the second example, buying and selling vehicles is inventory and not PPE. And in the last one, land and property, land and buildings is PPE, a non-current asset. And that's just a summary of what I just mentioned. There's an example of a non-current asset. Land and buildings, non-current asset. They're both property, plant, and equipment. Now, this was just an introduction to the theory of property, plant, and equipment. In the next video, we're going to look how to record, for example, the purchase of PPE, the purchase of a non-current asset. And later we're going to look at depreciation. So this was just an introduction to the theory on PPE. I hope you enjoyed this little video. I look forward to chatting to you in the next video.